Let's see. All right. Welcome, everybody, to episode 2 of Tax Therapy with yours truly, Stephen Palmieri and Sean Monahan. And we are coming to you today to give you therapy on taxes. That's right. So, anybody who's ever dealt with the IRS probably needs a little therapy, but we are able to help you guys with anything pretty much related to your tax situation. Sean is a licensed in tax court and an IRS enrolled agent. And today, let's kind of just jump on into the tax court world, because that's something that a lot of people don't really, thank goodness, I guess, have a lot of experience with. I mean, you'll file a return and then maybe you'll get a letter from the IRS that says, hey, we're making a mathematical adjustment or something like that. And a lot of times they'll just adjust it. And then maybe if you disagree, you go to audit. But then if you disagree with that, then you can go to tax court. And so, it's really kind of high up there on the pecking order. And by the way, for those of you guys joining us, feel free to chat in your questions. That's why we're here. But so, Sean, you are licensed in tax court and you've helped a lot of folks in that. So let's kind of talk about tax court. I mean, so first of all, tax court, just so people understand, it's not like a federal district court. It's kind of like a special court created by Congress. You can't have criminal matters in tax court. You have to go to federal court for that. But it's kind of like a specialty court created by Congress to kind of allow civil issues to be resolved in a legal court without jamming up the regular courts, right? So that's kind of high level of what tax court is. Go ahead, Sean.
It was intended to be, if I recall, it was the 40s or so, 1940s or so. There was a lot of disputes with, the agency back then, and so it was put in place to basically, from what I've read, is to kind of ease kind of push the agency to more, I guess, a more relaxed approach. I don't say relaxed approach, more approach to resolving conflicts between taxpayers and the agency's position on whatever. It became an outside agency or an outside court to handle that, but it wasn't intended to be as complicated, let's say, U.S. District Court, where there's a very adversarial process. And so the tax court is really meant to be a lower, less administratively burdensome for people to go and have a judge or someone review their case. That being said, it's still law. And so just as anyone does, and just as lawyers will do, they'll create more and more legal aspects to it. So to get into tax court, there's very specific things that have to happen along the way. You have to have certain things done. So as Steve, you mentioned a mathematical calculation change. Those don't by themselves create tax court jurisdiction. And so the IRS can look at your tax return and go, oh, we see the math is off, or we're doing this, or just an adjustment they view as a clerical issue on your return. And they just adjust it. You can respond back. I'll have to look at the code, but you can respond back. I think it's within 60 days saying, I'm moving this. I'm looking for relief for this adjustment under the code section to move this to deficiency procedures. And those are specific words you would use, and that puts it into tax court jurisdiction. And so it does a lot of things. It makes it not something you have to pay more immediately, and doesn't move it to collections. So those are what I would say are basically legal decisions and legal skills that someone do to represent.
Well, I mean, so you've touched on a lot of really interesting points. So as we talked about on our last episode, deadlines are pretty important. And unfortunately, we're dealing with the IRS, and a lot of taxpayers, they don't even open those letters. I mean, too bad, unfortunately.
Or understand them when they read them. So, yeah.
Or understand them if they do open them. But a lot of times they'll just not open them because they're just like, oh my gosh, it's the IRS. And so let's talk about that. I mean, you had mentioned deadlines. And so, if deadlines pass, so the whole, like, you've got this whole bureaucracy of the IRS set up to help you handle it. I mean, you've got appeals, then you've got tax court, and then, of course, if all else fails, you've got regular district court.
Well, some things these days you may not go through what would be, okay, there's a letter, you get a letter, you reply, you go back and forth, you have a right to appeal that department's determination. They then appeal, says, okay, we agree, disagree, and if you want to appeal that, that's not always the process. I would say it's a lot of times you go from this letter writing process to appeals to tax court, because eventually they just say, hey, we're issuing a letter and it's called a notice of deficiency, and you have to go. Appeals may take it under the jurisdiction of tax court, and that a lot of times happens. So if certain letters are not issued by the appeals department or appeals division, then what will happen is the IRS attorney's office will then take the case, they'll reply it in the tax court procedures, but then they'll remand it to appeals to be negotiated in that sense.
Well, let's kind of back up though and talk about the deadlines though. I mean, so you have only a certain period of time to bring something to appeals, and so
to some extent, yeah. Depends on when they issue a letter. If there's a formal issuance by a decision by, let's say, the examination department or division, whatever, that kind of enforcement, then yeah, you'll typically have a 30-day appeal letter that you have to write. Just in that sense, I'm just saying a lot of that formality seems to have faded a lot more recently than say it was 5 or 10 years ago. I don't see it as much, but you're right. There is definitely a letter, and under that bureaucracy, you can be denied your appeal.
So let's talk about our average viewer, average client. Okay, I mean, so you've got somebody who's got tax problems, which just go ahead and pick your problems. And they're not our routine maintenance clients, so they're not Johnny on the spot. Hey, Sean, Steven, look at the love letter I just received yesterday, well within the deadline. So I mean, look, somebody comes to us and then they're like, here's a shoebox worth of letters for the last 2 years. I've got all sorts of problems. All these deadlines have expired. Let's talk about the practical approach to helping the average real person watching who's got tax problems and is not like, oh, they sent me a 30-day letter or they sent me a 90-day letter. Oh, let me handle it within that. So how do we approach and help the average?
I think what you do, one is you're not looking to do this in some kind of spaghetti way. Like, you can look at it from a bottoms up. Someone doesn't come in usually with one year that's a problem. They come in with multiple years and multiple statuses. You can have someone who's under audit for a couple of years right now. They've got a letter you can go to tax court over. They may have 2 or 3 years that are in collection where they owe money. And so you've got this kind of sporadic process you've got to deal with. And so you kind of think of it from a top-down process. Money will always be an aspect to how much representation you can get. So, and I don't mean that to be greedy, but there's just time involved in this process, both you with the client collecting records, and a lot of clients will recall things very differently than the paper trail supports. When did you get divorced? When did you sell the house? When did you do this? And you start looking at paper.
To your point, again, I mean, business is business. It does cost money to represent tax.
No, I'm just saying go ahead.
But like with a lot of your consumer protection laws, a lot of those laws are designed, hey, if you go to a lawyer and they win, they can recoup attorney's fees. Now, a lot of what we're doing here, it's like your time. I mean, there's no way, like, the IRS isn't gonna, pay you for your time, right? So I mean, unfortunately, taxpayers, they do need real help, and but the tax representation, to your point, kind of goes along with the whole big pile of mess. So like you had said, maybe you're behind 4 or 5 years, and you have to look at each tax year. They could be in a different bucket with the IRS. You have some that are in collections, some that are in some other status. And so, and that's always a challenge, is when folks are behind with the IRS. A lot of times there are financial problems. We want to definitely help folks. But I mean, this is the kind of thing where the IRS doesn't reimburse us for our time, right? I mean, so
no, and it's not meant to be. I mean, there are situations, for example, I'll give one. I had a case last week. Client has $200,000 outstanding. They didn't quite understand what it was about. They thought someone else was taking care of it. He was actually a client of mine 5 or 6 years ago. I got the call from the IRS because the IRS had me as still a power of attorney. So I then called the client because I'm out of touch. and it was $200,000. And we sat down. He and I sat down over, I think, maybe an hour, collected everything, and we need to file a return for probably about 10 years ago.
Sean, that's when your client looks at you and your client's like, 200,000 what? I just don't remember owing the IRS 200,000.
Well, and I'm not saying that's not always, that's very common. I'll be honest with you. I don't think I owe that much. I don't remember that. How to get that? But to be honest, what happens is the IRS files a return on people who don't file. And so filing an original one took it from $176,000 will probably take it down to $3.
Yeah.
And so, that's kind of the process there, and how we work it. But sometimes the best thing is to, when you talk about deadlines, the deadline the IRS sets, there are definitely some legal deadlines that relate to having access to a tax court or appeals, or certain kinds of actions by the IRS taken. If it's collections, it can be levies on your wages or your bank account. It can be liens filed with the county clerk on your house. Those definitely are deadlines that you try to avoid or manage. But a lot of the deadlines, I will tell you, are more internal with your client, such as, okay, if you have a $200,000 problem, the church social this weekend probably shouldn't be your priority. Going to vacation this weekend or whatever, let's get the records and be priority and move forward, and not have this drag out over 6-8 weeks or 6-8 months trying to get the paperwork. And so a lot of times our clients lately, my office, a little too comfortable, and they create their own emergency, because even something like filing a return, I look at a tax return and say, this is $75,000 you owe. Do you have the money? Oh, I can get a home equity loan. So go get the home equity loan now. Don't wait till we hit the button and this becomes a tax bill with the IRS. Rather get the home equity loan now so you can pay the bill.
Yeah.
And not have the IRS be your bank. But they get comfortable. Then we file it, and then they owe it, and then they sit on it. And the slow creeping nature of the IRS gives too much comfort.
Yeah, so, until Elon Musk goes in and disgorges the IRS, but we're not there yet. So let's see, Mitchell, you say you hired TaxHive. TaxHive, isn't that what's Mr. Fabulous, the Shark Tank guy? What the hell's his name? Isn't that Mr. Fabulous's tax thing? I think I've seen those commercials. But well, Mitchell, if you're not happy with TaxHive, then you shoot me a message, buddy. We are here to help you, sir. But there's a lot of companies that are out there that'll help you. But so, all right, let's kind of, so high level, big picture. So, everything completely fails and you can't get through tax court. There is district court, which is like a real U.S. court. Not that tax court isn't, but it's like a specialty court. Yeah, but the issue with tax court, Sean, is that you pretty much almost without exception have to have already paid the tax to be able to damages. Whereas with tax court,
it depends, Willie. Not with tax court, you don't have to pay. District court,
right.
You have to pay.
The district court, you do have to pay. Yeah.
So most people are not going to be able to go to district court just by the fact they have some kind of an assessment against them. They got to pay it, because what you're doing is you're paying the tax, and then you're basically suing to get your money back. That's the process you're doing in district court typically. I
think that's important for people to understand. And Mitchell said, "Is Mr. Wonderful?" I think I said Mr. Fabulous. Mr. Wonderful, that's the Shark Tank guy that has the TaxHive. So go ahead and fire Mr. Wonderful, Mitchell, and shoot me a message. Let's do some more business, buddy. All right. So, but let's talk about that though, because it's kind of a big deal in order to have your ticket to board the district court train. You have to have, almost without exception, paid your tax, which, to your point, like there's a $200,000 bill or whatever the case is. If they're saying you owe them $200,000 and you legitimately, truly don't owe them nearly that at all, maybe it's truly a screw up. Too bad, so sad. You would still have to cough up $200,000 to get your train.
There are some administrative processes, we call them audit reconsiderations, where let's just say you look at something and go, hey, this person doesn't owe this. When you look at the tax return the way it should have been filed or whatever, then you can do an audit reconsideration, which is basically saying kind of mercy of the IRS. And generally, if you do everything like that in one, you generally get some decent results out of that. It can take a while, to do it, and you can get it reduced that way. But to your point, if it's if it's something you really have an argument with, and they're just taking a different interpretation, you'll probably have to pay the tax, file in district court. The advantages, what tends to be the advantages in courts is where you live might give you a little bit leeway. Plus, judges in district court typically are not as versed in tax law, tend to be a little bit more easily swayed in favor of the taxpayer sometimes, versus in tax court, judges are very adept at tax law and interpretation.
That's all they deal with.
That's all they do.
All day, every day. Yeah.
Mm-hmm.
And the tax court, the tax court is kind of like a traveling circus, isn't it, Sean? It moves around.
Traveling court, yes, it's a traveling court. And so if you've ever attended calendar call, they have probably, I don't know, probably every quarter is maybe 2 sessions a quarter here in Dallas, small claims and others. Looking back 300 cases on that calendar when that date is revealed or that week is revealed. And over time, it'll whittle down to maybe 5 or something the day of calendar that's really a case. Many are just settled or waiting for papers to settle on calendar call. They don't really try that many on that week.
Well, and I mean, and to the point though, I mean, again, I think maybe for folks to comprehend, like, it's not just, you go downtown to the courthouse and your court is in session. I mean, even though you would have to get in the docket and all, but it is, it's a traveling court because it's a specialty court, and it's
like 19 judges. I want to say typically, depending around 19 judges are appointed, and they rotate from various cities to do cases on the calendar calls at a given federal building they've got. They're going to use, and then of course, what happens really is you're negotiating and working with IRS office, counsel's office, or appeals if they've got the case from a negotiation standpoint, and you're trying to negotiate with them and discuss things and ideally narrow it down to what the basic real issues are. Hopefully common facts can be just agreed upon. You don't have to show that you're married. You don't have to show this kid is yours. You don't have to show where you live. Those kind of be agreed upon, and you kind of go from there and get down to the really 2, 3, 5 facts you have to argue, kind of a thing. But what really is a struggle for many clients to understand, or taxpayers, is the burden of proof is on you, largely speaking, to start with your position and present evidence in your favor. You have that burden of proof to start with. So if you're going to say, I only got so much money, then you're going to have to produce bank accounts to say, this is where my deposits are. This is all I got. And so some kind of other, you're kind of pushing some kind of records forward.
And so your lockbox number to your bank out in the Cayman,
crypto or whatever.
Like so let's see, Mitchell.
So you're basically having to show, and the reason that is because we hold the records of our financials in our hands. The IRS, in the beginning, the IRS didn't have much. That's increasingly changing, as we can see through a lot of third-party reporting. But the point being is that was the presumption. And so you have to produce records. And so that's why the burden of proof sits on you, the taxpayer, to show why you disagree or what your position is.
So let's kind of dial it back again to kind of your standard issue, viewer, client. You may have 4 or 5 years of problems, of issues, and all across the board in different departments with the IRS, different stages, different processes. So, and like notice deadlines, have expire and some of the stuff, whatever. So, I mean, let's just kind of, what would be just kind of your standard process to kind of scoop it all up, get control over it, no matter where.
The idea would be to sit with your client and actually get you. The IRS publishes, and this is something that's relatively new and clients need to really grasp, is you can create your own login for your tax ID. And businesses are getting it too. And I haven't experienced as much on the client side for the business, but we as enrolled agents, CPAs, can have access to transcripts online that kind of show what the tax year is, how much you owe, what's been paid, what the tax return was when it was filed. And we have, depending on what we're looking for, we can go back 10 years or more. We can go back 4 years for some things, but we want to pull that picture and see what the heck's going on for the years in question, or even just to see is what the client says they have years of problems for. Maybe it goes back further, kind of a thing. And so based upon those transcripts and then anything else they can bring in, such as the letters, we can look and go, okay, what's the problem and what's the opportunity? And as we've talked, I think in the last session, there's a 10-year collection statute based on what you have and haven't done over that 10-year period. So you might look at someone and say, hey, we're going to try and narrow this issue for now. If you don't have the money to pay this bill, this is going to go away in 18 months. So based upon that, that may be a bit of a strategy to let that die, because let's say it's a $200,000 bill over 5 years. You can afford to pay something more current, but some of the older years you can't.
Well, there's a whole lot to unpack there. So first, we're kind of saying, just we can pull it. Taxpayer can log on and
write transcripts, probably 4 or 5 different 3 or 4 different transcripts to see what's going on and what years are what, so we can get a feel for the bigger picture and what the opportunity could be. And you can find that, was a return filed on you or not filed by the IRS. That might be a solution to file an original one, because your original one will overwrite theirs to a certain extent. You can get into collection issues such as, okay, based upon this, can you really pay the bill? Do we put you in a non-collectible status, which means they just kind of leave you alone from a collections perspective? Just depends on there's all kinds of avenues to pursue, and there may be a minor strategy or tactic on one year, a bigger one on another, and those types of things. And so we even review the tax returns to see were they prepared correctly and were some missed opportunities. And that relate, and did the IRS even calculate what they thought was correct? Can we push back on some calculations? So there's a variety of things that can be done to bring that down, and they're not typically time sensitive as much as, if you need some of the time sensitive stuff tends to be wrapped around, do we need a more reasonable set of eyes to look at this information and give us a more experienced look at it? And that's that appeals opportunity, that tax court opportunity. To work with.
So if you've got a taxpayer, a client who, so the high level is the pain level kind of drives decision making, right? So if you're like saying, hey, you're a year and a half away, Mr. Taxpayer, Mrs. Taxpayer, from this 10-year statute of limitations, which, by the way, it actually doesn't start until you file the return. So
the return, until it's assessed, taxes assessed.
So don't think like, oh well, I didn't file my return in 10 years ago, so the statute expired. No. Like, by the time you file it, now, I mean, you may not need to go back and file 10 years. That's a whole other conversation. Mm-hmm. IRS typically wants you to go back 6 years to kind of get into compliance.
To get back in compliance, that's their policy, but it's not like it's law, but that's generally their policy. If you've been not filing for a number of years, they want you kind of back in for 6-ish. And kind of get you moving forward and that kind of stuff. Yeah.
So like, okay, so I mean, you've got a bunch of returns that you filed, you just haven't paid the tax. And so this return, to your example, maybe it's a year and a half, 2 years from that 10-year statute expiring. They haven't levied you or any of this kind of stuff. So the pain isn't really too incredibly intense as far as from the IRS perspective. So that's kind of a conversation of strategy. I mean, why does it make sense to try to get on an installment agreement when they haven't enforced collection? Just sit and.
Well, it's more about, do you have the money? If someone's got, someone's sitting in the bank account, it's a $200,000 debt, and they got $500,000 sitting in the bank, just sitting there. Obviously, they have the money, they can pay it, and I cannot advise them not to. But if someone's usually, I mean, I've never had that case. I take that back. I've had that one case on some payroll where the client was running around trying to shop advice, and I just kind of finally asked the guy, says, do you have the money? It was like $70,000 in payroll he owed, payroll taxes he owed. He says, well, do you have the money? He said, absolutely, I can write the check today. I said, well, do it.
Hell yeah, I've got the money. I haven't paid them. If I paid them, I wouldn't have any money.
So I was like, so he's like, he just looked at me and says, well, okay, that makes sense. So, but there can be a little bit of weird marketing processes in this effort that says, if you've got the money, don't, and you owe it, and you think you legitimately owe it, then let's talk about how you pay it, how you write it. That's the whole thing, how you write the check, how you allocate the money, all that stuff becomes very, very real in the process of paying stuff down.
Sean,
but
the only reason I've been able to build wealth, Sean, is because the money in the bank is because I haven't paid it to the IRS, Sean. Please don't
well, they're going to knock on your door, not mine. They're going to knock on your door.
But and then so ability to pay is something that you're talking about, which makes sense. And
Which that's
again,
very rare. It is very rare that someone has the money to pay it.
right.
And
So
so,
you
yeah,
can reach out to the IRS, and they kind of have like a currently not collectible status, which is kind of like just a queue, I guess, if you would, where they'll put this taxpayer. It's like, okay, well, you know, we agree that this person is currently not collectible, and so we're gonna, basically not harass the crap out of them, for whatever in the next year or two or
yeah,
whatever. So I mean, it's kind of like an informal thing. I mean, it's an official status that they have, but it's like you're not in an installment agreement and you're not making payments. And I mean, theoretically, they can take you out of that currently not collectible status and make your
yeah.
life more.
Usually, if they see if you file a return, subsequently file a return sometime after that, that shows you make more money than what you said you were making because you have to send in some forms, a 433 form, and it shows somehow what you say you're making. And so forth. In your bank, you're giving a lot of information that gives them a roadmap. Anytime you're in collections and you want an agreement with the IRS, you're giving a roadmap of what your financials are, where you bank, what the accounts are, what account numbers you have. All that stuff is laid out in those forms for them to kind of know where to go if you've got money, if they think you've got money. And so basically the agreement is, if you give me this, we're going to work on a deal to pay. We see what you think you can pay. Or we come to the conclusion that you can't pay based on some calculations they do, then they'll say, okay, you're this status, and then you continue to file, and you're not filing above their threshold, then they're not going to bother you for a while. And the clock does tick for those years that they don't chase you. It still continues to burn the time or the clock for collections. So it's a way to get some breathing room. But the idea is, the way we like to work, Steve, is we want you still to be our client so that if you do come into money, you do kind of get yourself rebuilt, that we start talking about, okay, how do we handle this and how we start managing forward. There are actually cases where you just voluntarily pay. That's one of the most misunderstood things out there, that says you have to be in agreement with the IRS to pay the taxes. Let's just say you owe 50 grand and you can afford to, they're going to want, maybe, I'm making up a number, 2 grand from you, but you can afford 1 grand a month. Well, then pay the 1 grand a month voluntarily and don't call for the 50 grand, the 2 grand a month.
Sean, they say it's a voluntary tax system, but actually that's one of those excuses that the IRS specifically has in their little manual, that if a taxpayer says, I put I made $100,000 on my W-2, but I'm asking for all the taxes refunded because it's a voluntary system on my tax return. Like, that is specifically in their manual. They're like, this is a domestic terrorist. He's a communist. We're going to throw him in tax prison. So, no such thing as a voluntary tax system. It's unbelievable, isn't it? So, but so somebody comes. Okay, so you're cruising along, and the IRS isn't really putting a squeeze on you, and you've just got a dumpster fire of stuff, which is pretty common. Mm-hmm. And then, okay, we kind of look at it and we assess where you.
And that's what levies are really not about collecting the tax. They're about waking the taxpayer up and bringing them back.
That's where I was going to go with that. So then somebody like the pain comes, they've got 2 years worth of letters that they've never opened up in their shoebox, but then all of a sudden they're being levied. So they're like, Sean, you open up, it's 6 a.m, please, when do you get here? So then the payment is on them. So let's talk about that. Okay, so now the IRS.
This is where deadlines hit, and it's kind of like one of those things. You're like, okay, typically my experience is levies will hit on Friday. When the banks are going to be closed, no one's going to talk to you on the weekend regarding this situation. So your money
you should go out drinking and boozing on Thursday, spend all your money, and then that way, by the time Friday comes, the IRS has nothing to levy. Is that what I'm hearing?
Yeah. Well, what the IRS does, they basically contact your bank, so they know where you bank. They don't even have to know the account you have; just know that it's Bank 123 or ABC, and they send a levy notice for this Social Security number saying we want to levy all these accounts for up to this amount. So if it's 50 grand and you've got 100 grand in your account, 50 grand is available to you. It's just the 50 grand is frozen. But if you've got 5 grand in your account, your entire account's frozen for the 50 grand levy. And the bank really sits on that money. They freeze your account for up to 21 days while you figure out what you're going to do with the IRS in terms of and the IRS will then potentially release it. They'll take it, whatever. For practical terms, most clients don't have a lot of money in the account, and the time and effort to go get that money back and release it can be very, expensive in time. So you sit there and discuss with your client what's in the account, how much do you have, what's going on, how can we work around the short-term cash flow issue. We can try and call somebody, but sometimes those are computerized levies. They're not a person assigned.
Well, let's talk about. I mean, so okay, guys, knocking on your door, 6 a.m. Sean, I saw episode 2 of Tax Therapy with you and Steven. Maybe they're knocking on both of our doors because they're like, I need help. I just got levied, and so okay, so they come in to sit in our office and like, I mean, we call the IRS. What's the process to kind
Well,
of?
you're not going to call the IRS till Monday morning. That's the whole point. So the whole point is to make you sweat over the weekend and be okay. Now I need to take care of this issue. It's gotten to that point.
You're the penance maker. You're gonna.
And the reality might be one spouse might know the issue, the other spouse might not be so clear about what the issue is, depending on the situation. So you might pick up the phone and try and call the IRS to negotiate something. They might release some of the funds, call the bank to release some of the funds so you can do something. It all depends on that person at the other end of the IRS, what their comfort level is, what their discretion is, how big the bill is, what their authority is. So it does become a lot of variables that come into that. Just even as getting across to that other person can be, 45 minutes, 2-hour wait, whatever. And what will generally happen is, you'll have to take power of attorney. You'll have to fax that in. You'll have to go through all this paperwork to do things. And then on top of that, you're going to have to turn to your client and say, we have a lot of record collection to get to figure out what's going on. Because they're probably levying for 1 year. They're not levying the whole. They don't usually.
Well, but let's again kind of back up. I mean, you had said your average client, which is true, isn't going to have a whole lot of money in the bank, but the average, whatever the statistic is, it's like over 50% of Americans are like a paycheck away from bankruptcy or whatever, the 2 paychecks away from bankruptcy, right? I mean, you're basically just enough in the bank to pay your bills and then pay your rent or your mortgage and feed the family and all that. So, I mean, let's talk about the practical application here. Okay, so your bank is being levied, and then so taxpayer needs some sort of relief for cash flow before the whole thing just falls apart, on them. And so, I mean, let's talk about just kind of rough average time frame from first levy to what can you expect? Like, is there a temporary relief that the IRS can grant to say, okay,
all that varies. There's no set work plan. That's my point. It's all variable to what you can do. So the levy can happen, and so that you might get someone who's very merciful on the other end, and they have the discretion, and they can sell it, and they can have. And it also depends on the debt. How old is the debt? Is the debt 6 months away from being written off? IRS will probably be less merciful for that.
Well, so I mean, is there a formal process? If you get levied, like, is there a formal right to appeal or to take it to tax court? Or
I mean, you could possibly do. You don't have it's a cap. Maybe you could file a cap, but I don't. You really have to get in conversations with the office that issued the levy. Cap is really just it's a collection appeal of sorts. It's not necessarily statutory right. They might give you something within 7 days, but you have to have a disagreement with the other person on the other side of that. The IRS person who's issued the levy, and in 99.9% of the cases, you just don't have a lot. I mean, you can try and do it. Maybe other professionals out there have had different situations, but it depends on the size of the levy too. Obviously, businesses can have more leeway because the business can shut down because they can levy a business account for payroll taxes. You can have a bit more leeway without, like, you're going to shut a business down with this levy. That's going to think, because then you'll have employees that are not going to have jobs, that kind of thing. That's a little different. But if it's something out there that you're paycheck to paycheck, doesn't mean the IRS won't work with you. But what has to happen is you have to come with some kind of plan of your own.
Okay, so that's kind of the pathway forward.
And that's the hard part to do in a 2 or 3 day panic, is to sit down and say, what can you do? What can you pay? How much money do you really need? And so you have to put some forth of a plan, and you have to kind of go and be making the priority to do this. Because generally what happens is if that levy is released, the tension's released, the client then just kind of goes, oh, okay, great. And they might just kind of disappear or ghost you for a month, when literally the next week is, this is your job. Whether you call in sick, whether whatever you got to do, this is the priority. And that's the point I'm trying to make, is if the client doesn't make it the priority, it's very, very hard for the professional to go, because the professional is putting their credibility on the line to some extent as well by making the phone call and being the power of attorney and doing those things.
I mean, ultimately, if they levy you and then you reach out, what about getting put on an installment agreement? Is that an exit strategy out of the levy?
You possibly could. Depends on the size of the bill. I mean, absolutely depends on the size of the bill. If it's a small bill, some of that you can probably say, yeah, let's do an installment agreement. It'll depend on the years left on the collection period, and what the IRS will let you do. A lot of times at that point, they want some kind of information. The whole collection installment agreement process is a lot of times is to get information on you for future levies. So you submit your bank account records, you submit all this information about yourself, your stock records or whatever, your brokerage accounts. And so they can look at it and go, okay, this is stuff we can do if you don't follow through with our installment agreement. There are some agreements now that they can do online stuff and things like that. That doesn't necessarily release the levy, but it can be a similar process. You can work with, to some extent, the IRS to say, hey, let's negotiate through basically an online agreement of sorts, a similar concept, that let's do this over the statute. Okay, a lot of times it's paid out over 7 years. We've got 7 years left. Let's take 7 years divided up, or the 12 times, was that 72 months? The balance divided by 72 months, that's what they can pay. We'll put it on today, we'll sign the right paper, do that, release the levy. You might actually get that if that math works for you. And you might actually say, let's do that for 3 months, and then we can try and renegotiate down while we collect more information to bring it down from that number to something more reasonable for you, if that's what you got to do.
Have you ever had any clients?
It's up to the client, IRS, to be honest.
Have you run into a situation with your clients being levied where they're able to then subsequently get either currently not collectible or offer in compromise?
Offer in compromise is a much larger process to do, and it's submitted to a different group than, say, someone who's levying you, typically. I mean, unless you've got a specific person assigned to the case. But a levy that results in a non-collectible at the end of the day, it's possible that happens. That isn't a lot of the clientele I've worked with in like the last 10 years, kind of thing. So that's not as common for my practice in the past. I'm not saying it's not something that doesn't happen. But the reality is you'll see levies against like people's Social Security. They can levy your Social Security payments. So
which is kind of wild. They'll tax Social Security and then they'll levy Social Security. Congress loves you, Mr. and Mrs. Audience taxpayer.
So you'll obviously, if you go into non-collectible, they release those levies and those kinds of things. But the issue is the IRS is basically, like I said, the levy is just a way to get you to come back into the system in some fashion to get under a plan to resolve this tax bill in some fashion. And
I mean, I guess the IRS kind of they sort of have, you would think, some sort of internal calculation or way of analyzing. I mean, they're like, okay, these people, it's not even worth the levy because they're so insolvent. I mean, there's got to be some scientific method.
I think now they do a lot of third party. They push some collections to third parties. It's under a certain balance, and I'm not sure if it's under 10 or what that threshold is, but you'll see third parties that are assigned the cases now. My experience, I don't recommend talking with those companies, because a lot of them can't do much more than, here's my money, kind of a thing. Here's your money, kind of a thing. In terms of the other stuff, the non-collectibles, I haven't had experience with them being that capable of doing that. It's more about collecting the money, maybe getting on a payment plan of sorts, and that's it. And very, very limited. I'd rather just go straight to the IRS, have the conversation with the IRS with a lot more tools to be made available than the third party collection agencies can do. So I don't recommend working with them, and at least, and that was probably what, 5 years ago. I think they started that, and I didn't have good experience in the first 2 or 3 years of that.
Yeah, just get it thrown back to the IRS and
well, it's usually some small dollars, anyways. You just go back to the IRS and deal with it, and move on. And so there's certain policies the IRS will do. They typically don't file a lien for under, if it's $25,000 in debt. They don't typically file a lien. It's a public notice of your debt to the IRS that can interrupt house sales, things like that. Levies can be anything. It just depends on what the situation is. But what happens is typically individual tax debts are not assigned to an individual person to resolve. Business tax debts typically are going to be assigned to what's called a revenue officer. And it'll vary from market to market, but here it's mostly business tax debts that the revenue officers are focusing on. Even a $200,000 individual 1040 debt doesn't wake someone up to come knock on your door. It's a computer, which makes it more difficult, to be honest, because you're not talking with a person. You can't phone a
50-year-old computer at that. The IRS mainframe is something. I think they built the IRS computer along with the lunar landing rover back in 1960. It wouldn't
surprise me. Yeah, it wouldn't surprise me.
It's unbelievable I mean, we're kind of joking, but not really, how antiquated the computer system at the IRS is.
Oh yeah. Well, I mean, it's if you look at this, I mean, there's issues where I've gone in and pulled transcripts through my access. This is even probably maybe 5 or 10 years ago. I pulled access and the revenue officer couldn't see what I'm seeing. So, and it kind of frustrated them. Like I could see stuff and look at stuff and they couldn't see it. So I pull it. I sent it to the revenue officer for them to look at, and they go, "Oh, okay. Based on this, they can talk to their boss and make the agreement that I need to make." And so they just couldn't see it. And why, I can't tell you why I had access to things that they didn't have access to.
And just kind of a point of reality check for our viewers. I mean, if you need to hire us for something on the fly, there is an authorization, either a power of attorney or just an authorization to talk to the IRS. And it takes time. So you would think that we have some portal with some modern tech way, since, and Sean's an enrolled agent, I've got my tax preparer number, that we could go in with the IRS and say, here's the authorization, or here's a POA, under penalty of perjury, give us authorization, here it is, scan and upload it. But it doesn't work that way. You have to scan a thing, send it to the IRS or fax it, but it literally takes them weeks to get it in the system.
Yeah.
Now, we can call the IRS with you, the taxpayer, on the phone, and you can give authorization right there to talk to us. But, just so you kind of realize, there's definitely nothing modern tech, even with us having, authorization numbers given to us by the IRS. It's still, we've got to scan, upload, send them your authorization, and then it literally just takes weeks in their queue for somebody to get it. And then, oh, you didn't fill out this little form, we're rejecting it.
Well, it can even be more complicated in the sense that if it's a married couple on an individual, you want to get both on the both POAs for them, powers of attorney, and then it's a year by year authorization. So if you're 1 year off, then it can throw a kink into everything. So it's just one of those things that you go, okay, you got 2 years. Well, I'm going to put 5 years on here just to be sure. Go back 3 years more than what you tell me just to be sure. And so it's just things like that come up. And what ends up being kind of a saving grace is the online access that clients can get to their own accounts, to some of that, at least to get transcripts. Because to your point, a lot of things you want to do, if you can, you don't have the levy situation or something where it's a very emergency. You don't want to go pick up the phone and say, hey, IRS, what's Stephen's situation? Can you send me information? You should kind of start waking things up. The idea is go in and look at transcripts and not stir things up, and not create deadlines that you don't need to have.
Well, yeah. So to that point, I mean, once our authorization is acknowledged and accepted by the IRS, then we can log in and pull transcripts, but that takes time. So yeah, you can just go to the IRS website as a taxpayer,
So,
and
if
if you've got like a little login with the IRS, we can
it takes
kind
about
of
10 minutes to create it if you don't. So, I mean, I think it might be an issue you haven't filed for a number of years, but if you're at least a recently regular or mostly regular filer, you can get it set up. And I've done that in client meetings. Let's just sit here and create your account and pull your transcripts, and then do the wife or the husband if they're joined. But yeah, that's becoming a way to kind of go and check. And it's also a good way just to say, hey, have that login and go check every year anyway to see if something's going on in your accounts.
So I think as we kind of wrap this one up, I think kind of sort of the takeaway, for this show would be, okay, hey, if you're watching and you've got issues, that's what we're here for, is to help you fix your tax problems, and then hopefully, keep you as a client for life, get you maintained, and then.
Well, let's talk about, before we cut this off, is, once you get into a plan, let's say it's a payment plan, offer and compromise, whatever, a lot of those things are based upon you staying compliant. And so you can get into a payment plan and then you file a tax return next year without the extension, you file a little late, or you owe a little tax bill. The IRS doesn't go, oh, that's okay, don't worry, that's okay, we'll just roll that into existing debt. No, they default you on your payment plan. You got to go back to the whole process all over again. And so, or if it's an offer and compromise and the debt's being wiped clean, well, you got to stay compliant for 5 years. And I did have one client that on their 5th year, they owed like $87. And they filed it like in September, and the IRS came back and reinstated 92 grand in taxes because the client did something like that. So that's kind of what we can be, is remind you, why you're in compliant, that will keep you in compliant, and then talk about your taxes. It's going to be 2025.
Sean, you were like, Mr. Customer, I'll charge you 91 grand to revert the 92 grand, right? So were you able to, so let's back up.
Well, the thing there was he tried to refile on his own for offer. And basically I just looked at it and said, the statute's going to go away in literally, I don't know if it was 6 months or something. And I basically got, a revenue officer on that case, and he looked at it and said the same thing. He says, okay, we'll just wipe this clean, no problem, we'll get it done and go away. And so
Sean had the back door with the IRS. The guy was like,
well, I mean,
we're gonna make this go away.
You get reasonable.
Sean, is that my briefcase full of cash right there? Is that for me? That's what the revenue officer was like, huh? Yeah. So did you just get a revenue officer to wipe away some guy's defaulted?
He just agreed to basically that the statute cleared is what it was. Yeah. So there's just little nuances that when you're dealing with the computer-based assignment of things, a lot of people don't have either the experience or the discretion inside the IRS to see those things. And so you think you're quoting law, and I always argue with this a lot. Oh, this court case says this and this law says that. A clerk doesn't understand that and is not going to get in trouble for not obeying that. Someone more experienced looks at it and says, yes, I get this. I can sell this to my leadership to get this changed or removed or agreed to or whatever. So,
but yeah, so the offer and compromise, which you said, it may not have resonated with our viewers here, but you literally have to stay squeaky clean, 100% compliant for 5 years from that, or else. So, I mean, to the example that you just gave, this taxpayer, and again, offer and compromise is essentially like literally pennies on the dollar. I mean, so if this person owed $92, yeah, I mean,
the approval rate for those isn't real high. I think it had been 20% approval at one point. I think it bumped to 30% during the COVID timeframe. I haven't looked at recent approval rates, so it's not like it's a done deal, and there's
right.
A lot of math,
a lot of declines. I mean, yeah, a lot of people don't, but if you get approved, I mean, that's why it's so stringent. If you get approved, it is literally like practically pennies on the dollar. I mean, it's a really good deal, but in exchange for that good deal, IRS is like the mafia. They're like, if you mess up once in 5 years, you're done. And like, yeah, you're like literally done. So kind of how we got into this, we were talking about, we'd like to keep you as a client for life. And Sean, so you were saying there's a lot of follow-up work, that needs to be done. I mean, it's not just, okay, we got the agreement done with the IRS, good luck to you. And look, we get it. Life happens. I mean, you guys are out there running your business, taking care of the family and all this kind of stuff. But I mean, that's why having access to somebody like us is kind of part of your relationship to keep this in order. It's not just a transactional type operation like
yeah,
HR.
that's where the tax industry, at least my perspective, it had probably in even around 2015, but definitely by COVID, was pushing into the proactive, like, okay, 2024 tax filing shouldn't be a big surprise for people at this point in time. 2025 should be your focus in terms of what you're going to do, what you expect to make, and what you expect to pay. It shouldn't be a surprise. That's the concept. Is filing the return is more administrative and less like what am I going to owe? This kind of see no, hear no, speak no evil kind of thing, and just hope for the best when we push the button. And it shouldn't be a hidden issue. It should be no surprise, and that's a very different thing for most people to grasp in their tax situation, at least that are going to professionals. So that makes it very different relationship.
So for those of you guys, you know how Congress was trying to create 80,000 new tax reps that are fully armed like the military. If they come knocking on your door, ladies and gentlemen, you come knocking on our door. Let Sean and Stephen know that the IRS is there. But all kidding aside, though, I mean, that's what we're here for. There's nothing to be embarrassed about. You've got a medical condition, you go to the doctor, and the doctors fix it, right? Yep. And you can get yourself in this hole where you really just kind of feel like you give up hope. But I think the takeaway we can all see from this is there is no cookie cutter. I mean, there's all sorts of things to consider. Are you solvent? Are you not solvent? How much money do you have? What's the statute of limitations? Is it close to expiring? Is it not? Have you filed the return? I mean, we haven't even touched on that, but the IRS can actually file your return for you, something they call a substitute for return, which is even wilder than you can possibly imagine. It's like, how can they file my return? Well, your employer 8 years ago sent a W-2 to you and the IRS. And so, yeah, of course, they're probably missing a lot of information, but they don't give a shit because they're the IRS. So they're like, okay, well, we're just going to take the information we have on you, Mr. Taxpayer, and we're going to, by the power granted to us by the Congress who hates you, we're going to file a tax return, for you. And then, good luck to you. Now, you can eventually go and file your own return to override that. But the point is there's all sorts of buckets that you can be in, and from one tax period to a next can all be all over the place, right?
Yeah.
So, that's where we come in. We can help you. We're not intimidated by the IRS. We deal with these people all the time, and we can help you figure out what needs to happen to get you guys fixed up. So that being said, Sean, I think we'll wrap up this episode.
Okay.
For you guys watching us, again, we appreciate you being here, and feel free to message us on whatever platform you're watching this on if you want to talk, and we will see all of you on the next episode of Tax Therapy. You all take care.